Okay, so welcome to House of Accounts. Welcome to House of Account Hire Purchase Installment Purchase System. Here we have already discussed the hire purchase installment purchase theory. What is hire purchase? What is installment purchase? In this question, we are going to solve. In this video, we are going to solve the sixth question of hire purchase and installment purchase system. Okay, so let's see. Let's see some big size. Okay, all right. Here, sixth question, number sixth. Okay. Hire purchase installment purchase system. Let's see. On 1st January 2000, Usha company obtained machine on hire purchase. Okay. 1st January 2000, Usha company obtained machine from hire purchase. The cash price of the machine was 25,000. The payment was to be made as 5,000 down payment and the balance by installment 4,000 per year with interest per year with interest at 4%. With interest means interest already included in 4,000. You are required to give necessary ledger account in the books of Usha company, assuming depreciation is to be written of 10% annually on straight line method. Look, 4,000 is annual, we have to pay the installment, and 4% interest is already included within installment. See, 4,000 per year with interest. Okay, so with interest means already interest added in installments. Okay, let's start from here. Machines. Okay, machines. Then here 1st January, it is from 1st January only. 25,000 down payment, installment 4,000, a down payment 5,000, 25,000 is a cash value. Okay, here check it. 25,000 as a vendor. 1st January 2002 vendor, first year. Okay, let's do one thing first. Let's do complete working note, then after then it is easy to prepare. Cash price 25,000 minus down payment 5,000, so balance is 5,000. Sorry, it's 4 I have written by mistake. Wait, I'm making correct it. Interest down payment is 5,000 and interest is 4,000. Okay, 21,000. Okay, here 21,000 we have got 21,000. We have to check the question. Let's once more. 5,000 to be down payment and 4,000 as a installment and 4% is a interest. Okay, so here delete this 4,000, make it 5,000, so 20,000 is the balance. Okay, interest for first year. The first year is 20,000 into, okay, interest is already included okay, interest is already included in installment, so no need to add interest again because we are paying already this. The interest is already added in installment per year with interest at 4%. Okay, so with interest we are paying installment, so no need to add interest again. Okay, note here, I'm writing in notes. Okay, interest calculate the interest separately. Calculate the interest separately. Okay, interest. Okay, let's calculate interest separately for hmm, calculate interest separately, that's it. Okay, then interest included in installment. Okay, interest already given here at below 800, 640, 480, 320 and 160. Okay, calculate the interest separately, the most important, and interest is already included in installment. Okay, interest is included in installment. Okay, now let's go to working notes. Okay, so this is the note, this is a question here. So let's do the working note first. Okay, 20,000. So there is no we no need to calculate interest. Okay, directly the balance will be 20,000 only. Okay, no need to calculate the interest because interest already included. So here just make blank. Now you will get the same amount, 20,000. Okay, same amount, 20,000. Okay, now first installment 4,000. 20,000 minus 4,000, you will get 16,000. Okay, 16,000 you will get. Okay, now no need to add the interest because the interest is already included in installment. So this is here. Okay, okay, so no need to add the interest again. The interest column is interest row is completely nil. Okay, so we have 16,000 is the balance. The interest is nil, so we have to pay the second installment. Okay, we have to pay the second installment. Okay, here we have to calculate the interest and installment separately. Okay, okay, look how much amount we have. If you want to calculate the interest separately, okay, the balance is 20,000. On this 20,000 we have to take the interest. Okay, 20,000 into 4%. Okay, 20,000 to 4% is equal to how much we are getting? 800. So interest is 800, means 3,200. 4,000 minus 800 is equal to 3,200 is the installment. Okay, so 3,200 we got the installment, 8,800 as a interest, and this interest is already included in installment. Okay, right here in working note it is a installment purpose, it is a working note purpose only. Okay, now go for second. There is no interest, directly installment, no interest. No, this is by mistake we have written there. Okay, by mistakenly we have written. Okay, I'm doing it, I'm correcting this one. Interest is completely nil. Okay, interest is completely nil. Now 16,000, balance same as 16,000. Now second installment is 4,000. Okay, after deducting this 4,000 we are getting 12,000 as a balance. Okay, here 16,000 into 4%. Okay, so take 16,000 into 4%. How much we are getting is equal to 640 we are getting. So now it is this is the interest. So 4,000 minus 640. Okay, we will get the installment. 4,000 minus 640 is equal to how much we are getting? Calculate this one. 3,360 is installment amount, actual installment amount. Okay, it is included with 650 with interest. The overall will be 4,000. Okay, now the third year there is no interest. Okay, third year there is no interest, interest nil, so remaining 12,000 as the same balance. Pay the third installment, 4,000. So 12,000 minus 4,000 is 8,000. Calculate the interest and installment amount separately. 12,000 into 4%. 12,000 into 4%. 480 we got interest. So if we want to know the installment, so 4,000 minus 480 is equal to how much we are getting? We are getting 3,520 as installment. Okay, now fourth installment. Okay, go to fourth installment. Interest is completely nil, balance 8,000. Deduct fourth installment, 8,000, then deduct 4,000 as a fourth installment. So I got balance 4,000. Then calculate the interest. 8,000 into 4% is equal to 40. How much we are getting? Calculate it. 320 will be the interest. 320 is interest. Now $4,000 minus 320 is equal to, this is the installment. Okay, 4,320 minus the amount 3,000 change we will get. Okay, so the interest is completely nil. Interest is completely nil. Last installment, so the balance is 4,000 only. Okay, So the last and final installment 4,000. Okay, so let's calculate the interest in installment. 4,000 is equal to 4%. 4,000 into 4,000 into 4%. 4,000 into 4% is equal to 160. Okay, is it interest? Now 4,000 minus 160 is equal to installment. 3,840 is the installment for fifth installment. Okay, fifth and final installment. Okay, here see in working note. Okay, okay, now the overall balance is 0. This is the way we have to do working note for hire purchase. Okay, now let's do machine accounts. Assuming 10%. Okay, see 25,000 is machine and down payment 5,000. Okay, 25,000 original value 10% and return of value of depreciation percentage 10%. So now let's make the machine account. It's very easy. See the year 1st January and 10% with straight line. Okay, here is the interest. This is the way we have to solve the working notes. Okay, so this is the working note for our question. Okay, let's see and pick. Working notes. Okay. Yeah, so machine accounts. Let's start the machine accounts. 1st January 2000 to vendor, it is 25,000 is the cash value of the machine. 31st December 2000 by depreciation 25,000 into 5%. 5%, 10%. Let's see 5%, whether it is 5% or 10%. It's 5% to 2,500. Direct 2,500 from 25,000, 22,500. The ledger is 25,000 and 25,000. This 22,500 we have to transfer for next year. 1st January 2001. Two balance brought down. 22,500. 22,500. 31st December 2001 by depreciation 10%. Okay, 32,500. So it is a straight line method, so we have to take the depreciation directly. Direct means first we got 2,500 depreciation. The depreciation same 2,500 will be repeat every year. So after deducting 2,500 from 22,000, 20,000 we will get the balance carried on. Okay, transfer to the next year. 1st January 2002, two balance brought down for third year. It is 20,000. Okay, now 31st December 2002 by depreciation 20,000 into 10%. No need for 10%. 2,500 we have already taken. Okay, So deduct these 2500 from 20,000. So we will get 17,500. Now write the ledgers balances 20,000 and 20,000. Now transfer these 17,500 to next year. 1st January 2003, two balance brought down 4th 17,500 by depreciation. Depreciation how much? 17,500 into 10%. Already 2,500 we have calculated. So carried on amount 17,500 minus 2,500, we got 15,000. Now ledger balances 17,500 and 17,500. Both the debit and credit should be tallied. Okay. Now the last. Okay. Here is a 15,000. Okay. This will be right here. Transfer. So balance carried on here, balance brought down. 1st January 2005. 4, it is 2004. 15,000, right? 15,000. Okay. By depreciation. Look, right? 31st December 2004. 04. 05 I have taken by mistaken. Okay, I'll change it later. So 2,500 is a depreciation. 15,000, this is the 5th year. 15,000 minus 2,500, we will get 12,500. Okay, so I got 15,000. Okay, overall 15,000. Okay, debits also 15,000 overall. Okay, so this is 5th, overall 5th also we have paid 5th installment. You can write here for transfer, otherwise you can leave here till here this problem. 1st January 2006, two balance brought down 12,500. This is the final value of machine after depreciation. Okay, now let's do vendor account. Okay, here we have to do vendor account. In place of truck we have to write machine. How much value of machine? 25,000. Okay, by machine 25,000, 1st January 2002, and interest will be nil because interest is already added. And 1st January 2000 we have paid down payment. 5,000 is the down payment, not 4. 5,000 is the down payment, and the first installment is 4,000. Okay, so from 25,000, 9,000 will be deducted, so we got 16,000 balance carried down. Ledger 25,000 here also. Okay, so by mistake. Okay, 25,000 ledger, and above balance carried on is 16,000. Here balance carried on 16,000. Now balance brought down 16,000 will be brought forward here to next year. Okay, this is the 1st January 2001, 16,000. Interest is nil. 31st December 2001, 4,000 payment, and 12,000 is the remaining balance amount. Here is the 16,000, and ledger should be tallied 16,000 and 16,000. Now this 12,000 we have to brought forward for the next year. Right here, 1st January 2002, 12,000, and interest will be nil. Balance is 4,000 installment. Balance is 8,000. as carried down amount. Okay, 12,000 ledger balance. Okay, here balance brought down 8,000. Balance, okay, first January 2003, balance brought down 8,000. There is no interest, so the fourth bank we got fourth installment is 31st December 2003. Fourth installment is 4,000. Okay, now 8,000 ledger balance and 8,000 ledger balance, both debit and credit. Okay, this 4,000 is we have to transfer some entries to next year. Okay, this is for fifth. First, here by balance brought down. Okay, by balance brought down 1st January 2004. Okay, interest also nil. By balance brought down 4,000, we have to take 4,000 here. Okay, 4,000 is the balance brought down. Interest is nil. Now 31st December, here write 31st December 2004. To bank the final full and final payment 4,000. There is no balance carried down, so ledger will be 4,000. Both the ledger, here debit is a 4,000, credit is a 4,000. This is the machinery, this is the vendor account, how we have to prepare. Now let's go for interest account. Okay, this is the vendor account. Now let's go for interest account. Like 1st January, interest account is very easy. We don't have much entries here, so first we just have to remember the interest values, interest amounts values. Okay, the 1st January 2002 interest suspense and by P&L should be credit side according to the general entry. Okay, 31st December 2002 also there. I have already prepared the pro forma to make it easy. Here is the interest in working note. Look, 800 first year, first year 800, second year 640, third year 480. Okay, 800 first year, 31st December 2000 by P&L 800 only, and 1st December January 2001 to interest suspense 640, 31st December 2001 by P&L 640, 1st January 2002 to interest suspense 480, 31st December 2002 by P&L 480. Okay, 1st December January 2003 interest suspense account. Okay, interest suspense account is 320, 31st December 2003 P&L 320, last. Okay, to interest suspense account. 160, 31st December 2004 by PNL. Okay, 160 by PNL 160. Interest account is very easy. Interest on depreciation account you can handle easily, but depreciation interest should be calculated correctly. Okay, you can see here the depreciation of your interest. So this is the way, it's easy format of interest. Now let's see, this is the machine account, machine performer. This is question. Okay, machine performer. So this is how we have to prepare hire purchase, hire machine account, hire vendor account, interest account. If you can do depreciation account also. Okay, so go to my channel playlist where you can find much more videos regarding the accounting classes. Okay, House of Accounts is the channel name. Okay, hire purchase and installment purchase system. Okay, so